thousands of carers across the UK are unknowingly sacrificing their future state pension whilst looking after loved ones. They're giving up work hours or stopping employment entirely to care for someone, and every week that passes without the right paperwork could mean losing hundreds of pounds in retirement. Most people don't realise that caring responsibilities can actually protect their pension entitlement, but only if they know what to claim. Right now, an estimated 10 million unpaid carers in Britain are at risk of missing out. Hit that like button, subscribe for more pension guidance, and comment below if you're caring for someone right now. Here's what's at stake if someone starts caring at age 50 and continues until they reach state pension age at 66. That's 16 years of potentially missing national insurance contributions. With the full state pension worth £230.25 per week, or nearly £12,000 per year, those missing years could slash their pension by thousands. But here's the good news. In this video, we're going to show you 4 ways that caring for someone can actually boost your state pension instead of harming it. Plus, there's a game-changing insight at the end that could help you claim for years you've already missed. The first thing carers need to understand is Carer's Allowance. This is a benefit worth £83.30 per week if you're caring for someone at least 35 hours per week. The person you're caring for must receive certain disability benefits like personal independence payment, disability living allowance, or attendance allowance. You don't have to live with them or even be related to them. Here's what most people miss though. Even if your state pension is already higher than £83.30 per week, you should still make the claim. That's because claiming Carer's Allowance automatically gives you national insurance credits every single week. These credits count as qualifying years towards your state pension, protecting your future entitlement even though you're not receiving the payment itself. The earnings limit is £196 per week after tax, so if you earn less than this, you could receive both the payment and the credits. Now here's the second solution, and it's brilliant for people who care between 20 and 35 hours per week. It's called Carer's Credit, and it's specifically designed to fill the gap in your national insurance record when you're not working enough to make contributions yourself. You need to care for someone at least 20 hours per week, and they must be receiving qualifying disability benefits. Unlike Carer's Allowance, there's no earnings limit with Carer's Credit. You can work and earn as much as you like and still receive these national insurance credits. This is perfect for people who've reduced their hours to care for someone or who care at weekends whilst working during the week. Each qualifying week that you claim Carer's Credit adds to your national insurance record, helping you reach that magic number of 35 qualifying years needed for the full state pension. The credits are automatically given as Class 3 national insurance contributions, the same type you'd have to pay hundreds of pounds to buy voluntarily. The third thing carers must do is check their national insurance record right now. Most people wait until they're approaching retirement before they look at this, but that's often too late. Go to gov.uk/check-national-insurance-record. You'll need to sign in with your government gateway account, or you can create one using photo ID. Your record will show you how many qualifying years you have, whether there are any gaps, and what your state pension forecast looks like. This is crucial because sometimes Carer's Credit doesn't appear automatically on your record, even if you've been caring. Some carers discover they should have been receiving credits for years but never applied. And if you spot gaps for years when you were caring, you can take action to fill them. The online service will tell you if you can pay voluntary contributions, but remember, as a carer, you might be entitled to free credits instead. Here's the fourth solution that catches people out. You can backdate your Carer's Credit claim, but only to the start of the previous tax year. The tax year runs from the 6th of April to the 5th of April the following year. So if you apply at any point during the current tax year, you can claim back to the 6th of April of the previous year. Let's say someone's been caring since January but didn't know about Carer's Credit. If they claim now, they can get credits backdated to the previous April, capturing those months they've already cared for. But here's the catch. Once that window closes, those credits are lost forever. That's why it's so important to claim as soon as you start caring, not months or years down the line. The earlier you claim, the more of your national insurance record you protect. So what happens when carers implement these solutions? Someone who starts claiming either carer's allowance or carer's credit immediately protects every single week of their caring time. Over 15 years of caring, that could mean the difference between getting a partial state pension or the full amount. The full state pension is currently worth £11,973 per year. If someone's missing 10 qualifying years because they didn't claim whilst caring, they could lose over £3,400 annually in retirement. But by claiming the credits they're entitled to, they turn their caring time into qualifying years that boost their pension instead of reducing it. Now here's that game-changing insight I promised you. If you've been caring for someone but never claimed carer's credit and the person you care for has since passed away or no longer needs care, you can still backdate the claim. In these special circumstances, you should contact the Carer's Allowance Unit directly on 080073 10297. Explain your situation and ask about backdating credits for the time you are caring. They have discretion to award credits for previous years in cases where someone genuinely qualified but didn't know to claim. This could rescue years of missing national insurance contributions and dramatically improve your state pension forecast. It's not guaranteed, but many carers have successfully claimed credits for past caring years after the person they cared for has died. Like this video, if it's helped you understand how caring can protect your pension, subscribe for more UK pension advice and guidance. Comment below with your biggest question about carer's credit or carer's allowance. Next week, we'll be covering how to maximise your state pension if you've got gaps in your record.